Greetings, everybody. This is Jeff Scott. We are approaching February 13th, 2022, and this is my weekend market update. I titled today, Buyers Beware, and my email address is hgsidoc@gmail.com. I welcome comments either within YouTube or directly via email. I do not keep a mailing list, so if you're interested in having access to these recordings, it's probably a good idea for you to subscribe on YouTube, and should get notifications. At least I know I do on some of the things I've subscribed to. And then the other thing is I would check back during the week this week because I'm likely to do things midweek as well. All right. Disclaimer. This is for educational purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. Tools demonstrator are tools that I use myself in my daily trading. I pay for the tools, and trading involves risk, and you alone are solely responsible for any decisions you make. Now, I will talk about how I identify stocks today. Sometimes I may even say how I might manage them. I want to reiterate, this is only about education, and it's more about showing the people that follow me how I can get through my top-down review in 30 minutes or so using wealth charts. There's more features coming on some of the things that I still would like to be adding to it, and my marketplace indicators are part of that, and we're working on that as we go. And hopefully we'll be able to launch those soon. But if I mention specific stocks, it's more for education. I'm not telling you to go buy anything. All right, that's it. So, top-down guy, what do? I start with the indexes. So, just for the sake of setting you where we're at, I've got 50-day in yellow, 200-day in red, simple moving averages on all my charts. Here was the big run-up in the spiders, and you could see that the spiders have rolled over. This was a trend line. This is the January 21st reversal low. You could see this week started off okay, and Wednesday we actually ran up, hit the trend line, approached the 50-day moving average, and then had a pretty big reversal on Thursday, and then Friday was just a mess driven by news. So we're still way off, or way above the 24 reversal lows, but we've broken down, failed at the 50, failed at the trend line, and broken down below the 200-day. That is not a healthy feeling market. On the Qs, we failed at the 200, so predictable, so predictable. Ran up, failed at the 200 on Wednesday on a very bullish day, could not break above it on Thursday, and broke down on Friday. So failing at the 200, getting a new sell signal on Friday on both the spiders and the Qs. The Dow broke above the 50 on Wednesday, reversed on Thursday and Friday, actually took out both the 50 and the 200, but has not generated a sell signal. The Russell, probably the strongest of the bunch right now, as you know, they had a strong Monday, Tuesday, Wednesday, and failed at the lower part of the Darvas box, but for the week they were actually the best in the market were small stocks. So that's a change we're seeing. No surprise the VXX as a measure of volatility is up a lot, which makes buying protection more expensive. And the dollar, which probably rose because of a flight to safety with the risk of Ukraine and other things going on in the market. Notice that across the board on spiders, Qs, and diamonds, we've got monthly bongos are red and weekly bongos are red. And what that tells me is probably the big uptrends are long gone, and pretty soon we'll be drawing new trend lines that looks like we're now in a downtrend with lower highs, and we'll see if this becomes lower lows. I think at the minimum, the markets today are much different than they were a few months back. If I was to look at the guppy charts, don't need to spend a lot of time here. I just want to point out again, spiders and Qs got EMS sell signals came in this week. We still have not flipped the moving averages yet, So we might still be early in the process. Only the Russell had flipped, and I sort of negated that because everything had tightened up so much because of the sideways movement since February. But you could see the Russell still has a buy signal here, as does the diamond. A healthy market looks like this. We are trading above the fastest of the moving average, and we're far from it. If I look at what's working now, I'll look at the market themes, and I look at the dailies to start with. We can see that if this line is going up to the top, that means the IWB, large stocks, are in command. When it's pointing to the bottom, small stocks, we had a change in character here. A sell signal, meaning a shift to the small stocks, came in on the 9th, on Wednesday. So is this a change in the market? If we look at how the market ended on the week, it clearly was down. So small caps led for the week. We see the change in character here. It'd be interesting to watch. If I look at growth versus what value, pointing up here means growth is in charge. Pointing down here, value is in charge. There's a daily chart. And you could see that ever since the end of November, value has been in charge. And if we look at Friday, you could see that, there was earlier in the week, it looked interesting for growth. And then growth just fell off as the week ended. So the week ending favoring small stocks, which is different, and value over growth. If I look at the sectors, the ones that really stand out to me when I look at this picture here are, look at energy going straight up, look at financials going straight up. You can see a gigantic move occurred in the last couple of hours on on materials. I'm sure that was gold and some of the other metals up in defense in response to what's going on in Ukraine. And then you could see in the middle is healthcare, and lagging are discretionary, and what's typically defensive assets, utilities, and real estate. So if I really wanted to be going long in this market, I might be looking at energy and financials. Technology is also very weak here, and that might be another source of stocks to look at if I was looking to the short side. Now, I'm going to go from here to Wealth Finder. Actually, I've got charts and scans and go to Wealth Scanner. So Wealth Scanner is really cool, and there's not a whole lot for you to do from a settings perspective. Now, you want to, if you dump stocks to a specific watch list, from here I might put them in my weekend review. So I might set up the watch list, apply. And then the other things you might look at is, what is your time frame? Are you a swing, position, or investor? I'm still working and deciding which of these two, swing or position, I want to be, because I do both. You can pick what time frames you want to look at. Since I'm more on a longer time frame, I drop some of the intraday time frames. Technicals, I want to include both of those. Fundamentals, I don't care about PE ratio. I'm interested in different types of fundamental research that might impact on it. And I didn't play with options here, but I could use this to look for presence of options, liquidity, etc. So it's going to take into those factors and give us an algorithmically determined wealth score. So if I just go to the top-down ETFs, which is a list I put together, and I look at what's bullish: energy, commodities, gas, XOP, so oil production, miners, oil, dividend players, banks, gold, financials, regional banks, insurance. What does that tell you about the market? It tells you finance and energy, so we knew that already. What's weak in this market? Interestingly, some of the high yield plays. The IBD 50 ETF, FFTY, I watch that all the time because historically I'm a small cap growth investor, but you can't be doing that when that's not working. The ARC funds are doing poorly as well, biotech. things that you probably are aware from looking at the markets on a daily basis. I can go down and look at the sectors, and again, letting this algorithmic score rank from top to bottom. And again, let's look at bullish. There's only 11 here, plus the spiders. 1, 2, 3, 4, 5, 6. And you can see energy, financials, staples, defensive, utilities, healthcare up at the top. And interestingly, on these time frames, materials, which is a lot more than precious metals, is more in the middle. Okay, so I can do that. Now, if I didn't want to go through a top-down review, I could certainly start looking at list of stocks and maybe the Russell 3000 and get an idea of what comes to the top. And it's not hard to see when you're looking at that, that all those stocks at the very top are energy. Robert Half International is a staffing company, among other things. So I could do that. But what I like to do is I like to build a list and then run this wealth score on that list. So I like to go to Sector Scanner. And in Sector Scanner, I like to rank by daily algo. And I could see energy, materials, financials are the top 3. So I'm going to play in that space right now. I can click all 3 of those, hit compare, and look how cool all the industry groups pop up. Again, they're ranked by daily algo. And if I put an X there, let's say we'll go down to regional banks. I hold the Shift key in, put an X there, they're all highlighted. So now I've identified those top ranked industry groups, and if I go to compare, I open up the stocks in the top ranked industry groups. And so I might do the same thing where I highlight, go down to maybe 750 on the wealth score, and that's kind of an arbitrary pick, frankly. Hit the Shift key, and now I've highlighted those. And let's add them to my watch list, which should be my weekend review. Yep. So I'm going to hit Add to Watch List, and these are all going to go into my weekend review. Now, I could also go back to where we started, highlight them all, compare, highlight them all again, and compare. And now I have all the industry groups, stocks listed here. So if I go back one, I have all the industry groups. And if I compare them, I bring up all, and they'll switch in a second, the names. There you go, to the various stocks. There's a big list here. I think it's like 5,000. So it takes, as you can see, not very long. So I've built a bullish list, and I also built doing the same thing where instead of looking at the good stuff, I would look at what's weak. And I might look at what's in real estate, utilities, healthcare, and technology, compare. And we might want to go to top down to here, compare, and then take, a bunch of these stocks and throw them into a bearish weekend watch list, which I call weekend short review, and apply. You can see they're being added there. So now I've created, using a top-down approach, I've already made my comments to you about what I think about the market, and I've then gone and identified the sectors that are the strongest up and the strongest down, and a group of stock in each of them. So I could now go back to Wealth Scanner, and now I could pull up that bullish list, weekend review. And when I do that, I'm pulling up some of the more bullish stocks in the market. Now, we're looking at pure strength here. So it's always possible that some of these stocks may be extended, but you'll find, let's look at the first one here, Vermilion Energy. It had a fresh EMS buy signal. It had 3 dots, which means it had momentum, a breakout, and volume. The bongo changed to bullish on the daily. The relative strength compared to the S&P broke above the moving average on the daily and on the weekly. And although this one looks a little bit extended here, it really has not. It just took out the 200-day moving average. So I like that, and I might add that to my buy watch list. Okay, and I've already done that, so I'm not going to care that I put it back in the same place. Grand Tierra is interesting chart, but I don't buy $1.26 stocks. Chevron, a more integrated approach. This one is a dividend payer. You can see a fresh wealth signal on the weekly. Again, is this thing extended? It's getting extended. The high jump bar is at 89%, so it could go higher, but when you start to spread out the 17, the 50, 200, and price so far away, you get to a point where typically you see either a sideways move or a pullback. So I probably would not be chasing Chevron. If I had it, I'd be smiling and not worrying about it. Halliburton is one I own, among others, and you can see it had a big move right here. So I want to talk about that day for a reason, because this is what I look for. Now, a lot of people go to me, Jeff, why the dots? Right. Well, as you know, the dots are different tools that I use that have meaning. The top dot is a big gap up. So we know that a lot of big moves start with a big gap up. The second dot is big volume. The third dot is a breakout. And the fourth dot is momentum. So the more dots I have, in my experience, the better the chance that that stock is going to move in the direction I want. But remember, market matters. And there's been a lot of one-day reversals, up one day, down the next, up, down. Choppy, nothing works great in chop. And I don't care what indicators you're looking at. Certainly things, on the momentum side are not built for chop. But on this date here that I've highlighted, we're coming out of a squeeze, sort of had a double bottom and a sort of a kind of a cup. And what happened here? Out of that squeeze, I had breakout of momentum. I broke above the 50. My relative strength turned up against the moving average. And when I look down here on the weekly on the same day, I had a new EMS signal. I took out the 200. I love this signal, and that was a reason to go long Halliburton. It's run from 23 to 33. When I've been doing this for a long time, and it's some combination of those dots breaking out from a major moving average with or without a squeeze have been my go-to signal for a long time. Now, you don't need my marketplace tools to have the bongo, the moving averages, and my dots. So you could be doing this today. Pump is another services company. You can certainly get the belief, expectation that something happened here on January 4th because you're seeing a lot of breakouts in energy occurring at that time. So clearly, when I put up the stocks in my weekend review, there are a lot of energy stocks that come to the top. In fact, most of them are energy. Cedar Rapids, Cedar Fair LP is I guess they own some amusement parks. This is the out-of-the-house type of a play. And again, big move up. To me, this one's too extended. I would not be chasing. So one way of doing this quickly is that I load these stocks up and I run them the bullish or the bearish against the wealth scanner. So this is something that every wealth charts owner has access to right now. So flip the shorts to bearish, see what comes up to the top. And you could see things like PayPal. Again, is this something I could be shorting right now? To me, no, this has already dropped too much. I like shorting things when they run back up into their moving averages. Facebook, I talk about run too far. You know, is it going to go up? I bet it goes higher someday. But look at this. You had a run up, a failure at the 50, and a breakdown here. But you had a big gap down on earnings. That would have been a hard one to take the short on. And you could go down and see some of the stocks using the wealth scanner that are showing weakness in the market. And for many of people, that may be all you need to do and go through the charts and find patterns that you like. Now, I want to take it one step further. And that's why we've developed, for me and for you at some point, the CAT scanner. And the CAT scanner allows me to start running scans that can help me find stocks based upon the criteria that I use. So let's go to one of my larger buy watch lists that I put together on the weekend. I call it my combo leaders list. And you can see it's a pretty big list. I think it's about 600 stocks on the bull side. And I highly doubt that you nor I really want to go and look at 600 stocks. And when I see Apple, I know they're not all bulls. So let's go into the filtering. And so I know that if I only want stocks that are uptrend, I want to look at the bullish bongo weekly. So I can filter it there, and let's put in a $5 minimum and apply. So now the list is still way too long to look at, so you're not going to want to look at that any more than I am. All right, how else can I filter it? How about, let's see if I can find stocks that have a 4, a 3, or a 2 dots. Apply, and now the list is getting smaller. It's still not small enough. All right, and well, let's just rank them by 4 dots or by number of dots. And let's see if we can find anything. So what have I brought up here? They're in a weekly uptrend because the bongo weekly is bullish. They may or may not have an EMS signal, okay? And I'm looking specifically at the dots. Now, if you look at something like Mr. Cooper, the problem is that's way too far gone. I can't trade that. It had 4 dots, a gap, volume, breakout, and momentum. Great on relative strength and move off the 50-day week. It's beautiful, but it's closed at $50. It's up 25% in one day. That's a high-risk trade. So if I want to eliminate things that have already broken out and run, let's add that squeeze. Boom, apply. And now I've got a more manageable list. Let's start at the top. SBSW. I could stop right here because this is my bullish pick of interest on the week. And let me tell you why. So for the first thing is it's in a squeeze. So that means I know it's been going sideways. It's been going sideways for the better part of 3 weeks. That's good. I know it's got 4 dots. So on Friday it had a gap, volume, breakout, momentum, out of a squeeze. Ooh, I like that. Relative strength increasing. If I look down here on the daily, relative strength broke out versus the spider. And here's a flag pulled into the 50 weekly and broke out. Now, I had some concerns when I first saw this that this was a buyout, but I can't find any evidence of that. And for those that like to make dividends, it also pays an 8% yield. So to me, this is a beautiful pattern. It's really gone sideways for quite some time, breaking out here. And again, do your homework. I'm not recommending this for buy. I'm showing you how I find things. CPE, Callan Petroleum, another similar pattern. It's in a squeeze, so I know it's been going sideways. It actually had a new wealth signal. Here's its EMS signal early, a few days back. 3 bars, 3 dots coming out of a squeeze. PSAR is already flipped. Strong on relative strength. I like CPE as well. EC is a integrated oil, I believe is Chilean or Argentinian, and you can see it too breaking out of a squeeze with 3 dots. So right up to the top come my favorite types of stocks. Now FANG, and I saw it right into the article this weekend that said buying the right thing. Instead of buying Facebook, Amazon, Netflix, and Google, you should be buying Diamondback Energy. I have a position in it. And why? Because if you go back here, all right, and back here, you have a stock that broke out above the moving averages. Here it came out of a squeeze with 2 dots. The types of things that I'm looking for on a day-to-day basis. The one thing that that blows me away on these energy stocks is their earnings per share growth, but we'll have to see how long that lasts. You can go down the list, you can see Regeneron, 3 dots in a squeeze, and you can see that pattern run up, pretty much a sideways move and a massive move on Friday in a bearish tape with volume, breakout, momentum from a squeeze. Regeneron looked interesting to me. And then one that's down here, I thought it was here, maybe not. Let's look for W, is it WRS? I've filtered this one away, but this is one that I looked at as well. This is a REIT, if I can ever find it. All right, let me see what I need to do. Let's take off the squeeze. And now let's limit these stocks to only those that have a bullish EMS. I believe this one had an EMS. And nope, here's KPTI, that's a small biotech. And then I'm going to turn off all of my filters here. Let's just see if I can find that one stock. I can't remember the name that looked interesting. Let's do it alphabetical. Let's go down to the W's. WSR. This is a REIT, a squeeze, and 3 dots. And you can see, it's still showing me Karyopharma. Oh, I have an internet problem. We'll look at it over here, Wealth Finder, WSR. I have a lot of things on my Whitestone REIT is the name, and let's see it. And you could see 3 stars out of a squeeze, $10 REIT, and they have, if I remember correctly, internet stable shopping centers. I think there's stores that don't have a lot of Amazon competition. Let's go back to charts and scans, and let's look at Sonoma. Anyways, let's go to the bearish side, and then I'm going to say goodnight. Before I go to the bearish side, a lot of people ask for the list of stocks that I'm going to be watching on Monday. So if you want, you can stop this and take a look. But these are some of the, and there it is, WSR, some of the bulls that I'm looking at come Monday. And what do they have in common? For the most part, their weekly bongo is bullish. BGS is just a sideways player that pays a nice dividend that looked interesting, but clearly it's not something I'm going to be running out and getting. It's something I'm just going to watch. I think it's because of the dividend and the sideways performance, but you could see a number of things that we looked at here as well. The CPE we looked at, the FANG we looked at, SBSW, the Regeneron. These are some of the stocks I liked. A couple of weeks ago, I think I looked at CF, and this is one that will turn out to be one of the big winners this year. The agricultural chemicals, this in Mosaic. And again, same old story. Go right back here. You got an EMS, you got squeeze and a bunch of dots, and you come down to weekly and you have a breakout here on the weekly at the same time. So those are some of the bullish picks. On the bearish side, I'm just going to go to the picks that I'm looking at. And let's look at the characteristics of my bearish. EPAM, for example, has 3 dots and a new sell signal breaking down below the 17-day moving average. I kind of like this one as a potential short. There's nothing underneath to give it support until you get down to the 300 range on the weekly 200. AMT, American Towers. This is a great stock on the way up, but it's clearly broken down as well. 200's a little bit closer. Some of these are here just so I watch them. Boy, I hope Microsoft doesn't break down, because if Microsoft and Apple and Google break down, what's that going to do to the market? But look at Microsoft. You got a sell signal. You're sitting right above the 200-day moving average with the EMS sell, momentum, and a breakout from a squeeze, a new bongo sell signal, and your relative strength is breaking down. The saving grace is you can still bounce off that 200, and you've got the 50 weekly as support. So it's not broken down yet, but I'm going to watch it. That's why it's called a watch list. We got stocks like AVGO that have had just massive moves since the bottom of the market in March. And this one failed at its 50. And in my experience, when you fail at your 50, look out for that 200. Smart guy David Elliott used to call that an ice hole failure. Apple, you can see it there. Probably a lot of people still own it. Apple's in my opinion, a dangerous beast here. It's broken down below its 50 and the 17. There's a long way down to the 200, down to about 150. Still got support underneath it on the weekly. But like Microsoft, like Google, Apple, this market's got a lot of damage in here. So I'm not the guy that does a lot of individual shorts. I take them, and I'm getting a list ready. Look at Google, broke down below the 200 with the new sell signal on Friday. Again, still protection here. With a breakdown here, I got to worry about 1650. That's a long way. It's not going down that low, but could it go down to this gap area here, 2130? It certainly could. I'm watching these because I know if Apple, Google, Microsoft break down, NVIDIA, which has earnings this week. Earnings have not been great for a lot of companies as far as they've been treated. Failed at the 50. It's sitting right now in between moving averages. But a breakdown below this 200-day moving average is going to be significant. So to me, this is as much a list to watch from. Sure, there's some on this list, CDW for one of them. And this is what I'm looking for in some of the others. My early sell, well signal sell, look at this, squeeze with 3 dots. And a break below the 200, break below the 50 on the weekly. Look how the relative strength versus the spider has broken down on the daily and on the weekly. This is something that's in trouble. This is one that if the market breaks down, that I'm going to be looking at. And again, I'm not telling you to buy or sell, go long or short. I'm not telling you what to do. I'm showing you how I use the tools to help drive me to find the stocks that I trade and make money in the market. On that note, be careful this week. We've got an emergency Fed meeting tomorrow. We've got Biden warning that as soon as Tuesday, Ukraine is going to be attacked by Russia. We've got Fed heads speaking multiple times during this week. We've got economic data coming out this week. We've got FOMC minutes coming out this week. And oh, by the way, we've got a ton of earnings. So put your seatbelts on. And like I said in the beginning, buyers beware. But it's not a slam dunk that we don't see a rally. So buyers beware and sellers don't get too giddy. Good night, everybody. Thank you.